Welcome to CBSEasy.
All right, exam season is on, and you know what that means. It's time to absolutely crush the Money and Credit chapter. Welcome to your 5-minute masterclass, designed to get you maximum marks with minimum stress.
So what's the secret sauce? How do you lock in full marks on literally any question from this chapter? Well, it's not about just reading the textbook cover to cover. It's about knowing exactly what the examiners are looking for.
And that's exactly what I'm going to give you. We've got board alerts for those questions that pop up all the time, topper secrets with the magic keywords you need, and the ultimate exam blueprint. Let's dive in.
First things first, we've got to crack the barter problem. See, to get why money is so important, you first have to understand what life was like without it, and it all boils down to one massive headache.
And this is the big one. Double coincidence of wants. Sounds fancy, right? But it's actually super simple. Imagine you're a shoemaker and you need wheat. Under the barter system, you don't just have to find someone with wheat, you have to find a wheat farmer who specifically wants to trade for, you guessed it, shoes. It's a nightmare.
Okay, listen up. This is a huge board alert. We're talking about a classic 3-mark question here. It almost always shows up in some form. So let's break down the perfect answer point by point.
So, how does money fix this mess? Simple. It acts as a common medium of exchange. Our shoemaker can now sell his shoes to literally anyone for money. Then he takes that money and goes and buys wheat from the farmer. See? Buying and selling are now two completely separate things, and you should 100% use this exact example in your answer.
Now you want a topper's secret. You want to take your answer from good to full marks guaranteed? Use this one magic word, intermediate. Saying that money acts as an intermediate just shows you're on another level. That's a key word that makes examiners tick that final box.
All right, so we've nailed why we need money. But now, let's talk about the money we use today. Because honestly, it's kind of weird when you stop and think about it.
Just look at this. On one side, you've got old coins made of actual gold or silver. They were valuable in themselves. On the other side, a paper note. It's just paper. So why on earth is it worth anything?
No, seriously, think about it. Why do we all just agree that this piece of paper is worth something? What's stopping it from being just, well, paper? The answer is the absolute core of this chapter. And here it is. It all boils down to one thing. It is authorized by the government. That's it. In India, the Reserve Bank of India, the RBI, says this paper is money, so it's money. It's all about that official stamp of approval.
Heads up, another board alert, this time for an MCQ. They love to ask what counts as modern currency. And it's not just notes and coins. They'll try to trick you. Remember, it also includes demand deposits, that's the money in your bank account, and checks. Don't get caught out.
Okay, money, check. Now, let's level up and get into the ultimate game of credit. This is where banks, borrowers, and some really important rules of the game come into the picture.
So, before anyone gives you a loan, you got to agree to the terms of credit. Think of it as the rule book for borrowing money. It's got 4 main parts: the interest rate, the documents you need, how you're going to pay it back, and this really important thing called collateral.
Let's make this super clear with Mega's loan, okay? So she needs 5 lakhs. What's the paperwork? Her job records and salary slips. What's the cost? That's the interest rate, 12%. How does she pay it back? And monthly installments. And the guarantee for the bank? The papers to her new house. That right there, that's the collateral.
Now here's another pro tip, a real topper's secret. Anytime you mention the word collateral in an answer, always define it. Just pop in that one simple sentence. Collateral is an asset the borrower owns and uses as a guarantee. It shows you've got your basics down cold.
And now, for the main event. In this corner, we have the slick, regulated formal sector. And in the other corner, the unpredictable, high-stakes informal sector. This showdown is everything when it comes to credit in India.
The difference is night and day, really. The formal sector, that's your banks and cooperatives, all watched over by the RBI. That means lower interest rates, but you almost always need collateral. The informal sector, moneylenders, traders, no supervision. So interest rates can be crazy high, but sometimes it's the only option for people without assets.
So where are people in rural India actually getting their credit? Well, this data is pretty eye-opening. Banks are number 1, sure, at 51%, but look at that. Moneylenders are at a massive 23%. That's almost a quarter of all loans, which tells you just how important the informal sector still is.
Now this is the slide that explains everything. See that blue slice? That's formal credit from banks.
Just watch what happens as we go from the poorest families on the left to the richest on the right. The blue part gets bigger and bigger and bigger. You know why? Collateral. The richer you are, the more assets you have to offer as a guarantee. This is a classic case-based question, so make sure you get this.
We've mentioned the RBI a bunch, so let's do a quick spotlight on its role. Think of it as the financial guardian of the entire country. It's the big boss.
Another board alert. This is your go-to answer for a quick 2-mark question on what the RBI does. Just 3 points. 1, it prints the money. 2, it's the supervisor for all the other banks. And 3, it makes sure those banks lend to everybody, not just big businesses, but small farmers too. Easy 2 marks.
Phew. Okay, that was a whirlwind tour, but we've covered a ton of ground. Now, let's bring it all together. This is your final blueprint for the exam.
This right here, this is your secret weapon, your topper's keyword cheat sheet. If you can sprinkle these phrases into your answers, double coincidence of wants, medium of exchange, authorized by the government, you're basically speaking the examiner's language. This is how you score big.
And hey, one last thing. A little heads up to save you from a super common mistake. Don't mix up the RBI and regular banks. It's easy. RBI is the coach, the supervisor. Commercial banks are the players on the field, lending money to you and me.
So I'm going to leave you with this big question. It's really what this whole chapter is about. We know cheap credit from banks is absolutely crucial for a country to grow. So why is it that the very people who need it the most, the poor, have the hardest time getting it? Think about that. All right, that's your masterclass. Now go smash those exams.
Thank you for watching with us. See you next time.